your prize.
Greetings, everyone.
Good afternoon.
Hi, Royce. Robbie, make sure you're unmute just to test your audio.
Hello.
Speak.
Good afternoon.
Good afternoon.
Is my volume okay?
Yeah.
It is.
Yeah.
Okay, good. Thanks very much. We'll begin in just 1 second.
Great.
And the order will be Robbie, Royce, Alina.
And how much time will we have at the
Take about 10, 12 minutes, something like that.
okay.
I want to allow some time to see if we get some questions from the audience, and then Robbie and I have some follow-ups.
And I know I will have to cut out.
Quite a long day with a lot of information and a lot of wonderful speakers, and I know I've learned a great deal. One of the things that has emerged in a lot of the conversations and is based upon research that many of us have done is there's this myth or this illusion out there that somehow if you own a house, it's more expensive than it is if you rent a house. The research by the Urban Institute and also the research that Luke Bell from Zillow earlier that they have done have made it really quite clear that it is less expensive to own a house month by month, year by year, than it is to rent a house month by month, year by year. The question is, how do you get through the barriers from being a renter to being an owner? So, and a lot of those barriers we've heard in other panels, but a lot of those barriers are financial, just purely financial. So what we want to do this afternoon is explore what some of those barriers are, how we might go about getting through them. And so the way we're going to proceed, we're going to begin with Robbie Suggs, who's going to lay out some of those challenges. And then we're going to hear from two different types of regional financial institutions of how they deal with it. How are they dealing with this question of home ownership and wealth, and what challenges they face and how they're trying to work to overcome them. So without further ado, I'll turn it over to Robbie Suggs. Robbie is the chief, and I'm not going to do long introductions. Again, go to the bios that are on the web page. Emma, if you'll put those back up, that link, so people can go to that to see what the full bios. All of them have very impressive bios, so be sure and read them. But Robbie is the chief lending officer for the Cincinnati Development Fund. So Robbie, if you'll take us away with some of the challenges we face. Thank you.
Certainly, James, and thank you so very much for inviting me to be with such an illustrious panel. These are individuals that I've known for a long time and really trust their abilities to do what they do every single day. I just want to tell you just a little bit about Cincinnati Development Fund. Cincinnati Development Fund was formed in 1988, and its mission is to provide innovative real estate financing for projects that strengthen low-income neighborhoods and improve lives. Cincinnati Development Fund's vision is to be at the forefront of redevelopment plans in greater Cincinnati and beyond, helping low-income communities preserve their historic buildings and create vibrant, inclusive neighborhoods. We are committed to expanding lending to accelerate affordable housing, construction, renovation, and to support neighborhood business district renovation. And we are seeking new sources of flexible capital that will enable us to achieve that goal. We work with many financial institutions. We partner with them to achieve these goals. So, we are not in competition with the banks. We are working in conjunction with them. Next slide, please. So what I would like to talk to you today about is some challenges to homeownership. And when I say challenges, I'm looking for challenges for individuals, mostly not necessarily a developer. As we know, once that developer does their work, then comes in the individual who can purchase the property. So this first slide just talks about some of the things that I'm going to discuss today. This is certainly not an all-exclusive list to the challenges to home ownership for people of color. Next slide, please. So personal credit management is one of the things that we talk about all the time when we're speaking about a challenge to home ownership. Managing credit is critical to the success of home ownership experience. Your credit number affects the mortgage rate, so knowing your score can help determine if you're prepared to purchase or not. And this is something I think is important because most people tend to ignore that particular part of their financial well-being. One way to ensure a smoother process is to be pre-approved prior to applying. Pre-approval will help you know exactly what you can afford and find the best rates and terms in advance of your purchase. Pre-approval is different from pre-qualification. So please keep that in mind when you're looking for that particular service for yourself. Next slide, please. The lack of adequate down payment and job stability. So saving thousands of dollars usually needed for a minimal down payment takes time. To help close the gap, home buyers are encouraged to seek out down payment assistance programs that may be available from banks, builders, and other sources, as well as to retain a realtor who will negotiate for closing cost assistance from the seller if possible. Typical down payment is going to be 3 to 5%, and I think our two lenders on the panel will probably talk about this as well. Job security is, the lack thereof is another very important challenge for homeownership. Most mortgage financing requires a certain period where you have worked for the same employer and in the same position. You will be asked to prove this history and may be required to have a letter from your employer verifying your tenure. Working with an experienced loan officer will help you to navigate through this process and make sure you are aware of the required documentation. Next slide, please. Systemic and unfavorable lending practices has been an issue that's gone on for decades. And when I say decades, I mean decades. The impact of historical systemic institutional practices like redlining, predatory and discriminatory lending practices further compound the effects of these challenges for Black home households. Pardon me. This means that in many ways, homeownership can be more costly for Black people and may yield less return in investment for Black households. Nevertheless, homeownership is still a major driver towards closing the racial wealth gap. While some studies support the claim that the disparity merely reflects the fact that minorities generally have lower credit scores and less cash for down payments, many studies have also shown that Black households, regardless of financial and social indicators such as education, income, credit score, and do not receive proportional benefit when compared to white households with the same indicators. So just want to make that clear. When we're talking apples to apples, we are still not receiving the same benefits as a white borrower when it comes to home ownership. And those things need to change. Next slide, please. Looks like we have a double slide. Yeah, okay, thank you. Land use restrictions fall hardest on lower income households. Because land usage regulations tend to limit housing supply and drive up the price of housing, current homeowners tend to benefit while renters and new homeowners are harmed. This is a burden that falls disproportionately on poor households, which spend a larger percentage of their income on on housing than wealthier households, which are most likely to rent than own. The effects are most pronounced in some of the most productive cities in the United States, where the high cost of housing has kept production growth relatively low despite the greater economic opportunities afforded by their cities. This foreclosing of economic opportunity should inhibit overall economic growth in long term. Next slide, please. Knowledge of the process. This is one that is not a lender at this particular time for mortgages. At one time I did. And this particular challenge is still one that exists today. So pre-approval process, as I spoke before, pre-approval versus pre-qualification. The offer, which your realtor will help you to manage that part of the process. The loan application itself can be tricky to some, so working with an experienced loan officer will help get through that process without causing so many concerns and then make the experience better. Next slide, please. Rate locking is another part of the experience where understanding that a rate can be locked so that you're not concerned about the fluctuations of rates during the time period between your approval and the time that you actually close your loan. The loan processing part of the process contains a few things: the appraisal, the title and escrow, and underwriting. Those are all three important parts of the processing, and they do tend to take a good portion of the time for the actual loan process. The closing is where you come together with the buyer and the seller and the lender, and sometimes your real estate agent will be there as well, and you will sign more papers than you've ever seen in your life, but it's very important that they all get signed and also that you understand what you're signing. And then finally, you're getting the keys to your property. This is a very exciting and many times emotional time for folks because they may be the first person in their family. It's a legacy that they're creating for their family for wealth building and home ownership. Next slide, please. I just wanted to share a little bit about what the pandemic has looked like for the home buying process. There's been some issues with keeping folks in their homes. So that legacy can, be cut short if for some reason the current home buyer cannot keep their home. It also goes to evictions for renters as well. There's several things that enter into why these situations exist, and some of it is definitely related to people of color not receiving the same benefits as their white partners. Next slide, please. And the differences of the benefits of homeownership are listed here. I just wanted to share this as we know, and it's been mentioned before and by other presenters, that there is definitely a difference in the benefits that individuals receive from homeownership purchase. I did provide some references on the next slide, and I close there with my information if anyone would like to contact me later. Thank you.
Thank you, Robbie. Just and to the audience, once again, if you have questions, please put those in the chat box, and I will try to collect as many of those as I possibly can, so that we can have the participants respond to that. Our next speaker is Royce Sutton. He is the Senior Vice President, Community and Economic Development Market Manager for Fifth Third Bank here in Cincinnati. Royce.
Thank you, James. I really appreciate the opportunity to share with the audience today on this very timely and important topic. As we think about how we can advance what has been traditionally the most powerful wealth building tool for families, whether we're talking about families of color or families that are not. This has been an opportunity for families who are starting from the very beginning to build wealth. So I want to touch on a few things today in my comments that really address some of the systemic or historic issues that have posed barriers for, in particular, people of color becoming homeowners. I'm going to talk about some of the strategies that could potentially be deployed to improve or to help families, especially those of color, to build wealth in these times. And then I'll look at some opportunities here in the marketplace and just kind of how what we're seeing, how things are impacted by what we're seeing in the marketplace at this time. Next slide. So as we think about the idea of really beginning to become a homeowner, it's a process. As for those who've been fortunate enough to go through that. But what we know is not just one thing that you have to do. Great comment, that quote from Samurai Champloo: "You can't build a castle if all you have is a carpenter." So it takes several pieces to come together to make sure that those who are traditionally disenfranchised have an opportunity to become homeowners. Next slide, please. So if we can look at just some of the things that we know that are in fact facts. I spend a lot of time with my team in the course of my 20-something years in banking. I spend a lot of time talking about wealth building tools and strategies and things that can be done, recognizing that there are some things that are challenges or barriers that are posed in the way of that. So if we think about just really, especially African Americans coming out of slavery, one of the first things that they began to do was to purchase homes. They were buying land, they were starting businesses, building schools, and all these were part of creating what would be the part of the economic mainstream for those who had endured so much, had been through so much. And even as we advance further and think about Jim Crow laws and actual legal discrimination that made it difficult or almost impossible for some to become property owners, that was the dream that many had. So right now, if we look at the data, and this has probably been shared in some of the other discussions, the median wealth of white households is 20 times greater than that of African American households. Blacks are 3 times less likely to have a bank account as compared to the general population. The national homeownership rate for African Americans or for Blacks is 44%. And 73.5% for whites. And there's a number shared earlier. I mean, when we look at in Greater Cincinnati, the number is much lower. It's 31% for Blacks. From 1983 to 2016, Blacks families saw their wealth decrease by more than half, while white families saw their wealth increase by 33%. The median wealth of white families, this is speaking now of the overall assets that a family owns, $171,000 for a white family. For Blacks, $17,600. The top 10% of all households were the ones that recovered their wealth after the recession period between 2007 and 2014. Kids struggling are often clustered in struggling schools. The top 10% of U.S. households own 89% of all the stocks. The richest Americans, their principal residence accounts for just 7.69% of their overall wealth. And 2/3 of Americans are not saving money in their 401k pro. So when you look at those circumstances and what we're seeing here relative to wealth, how do we build? How do we find ways to structure collaborative efforts or individual efforts from institutions, organizations, and businesses and nonprofits and municipal organizations to really challenge and directly peck at these issues here? So if we could go to the next slide, please. So beyond those facts, I wanted to just really try to think about if you're going to create wealth and begin to build a way and a path toward homeownership, dividing it really into 3 primary areas: people, place, and proficiency. People, place, and proficiency. If we look at people, if we're going to begin to make changes and begin to look at how systemically we can move these numbers that do not seem to be very favorable for those that are people of color, let's look at, when you think about those who are involved in the transaction process, we need more people of color who are actually in the decision-making process and are in visible positions. There's nothing like walking in and seeing a loan officer who may look like you in the process, or who maybe understands what your experience may be, to really help you feel a lot more comfortable. One of the major things that we hear from, in particular, people of color who may not have a lot of experience working with financial institutions or the homeownership process is the feeling of not one, that there's a lack of trust, and then there's a lack of feeling comfortable about even entering into the process. So we've got some work to do on our end of the table to make sure that's an issue. And then as well, culturally competent staff. So what does that mean? So really thinking about, what are some of the challenges, some of the questions that people may typically have as they struggle with this idea of becoming a homeowner. So understanding some of the cultural nuances and backgrounds that people of color are faced with are essential as you sit down with the client for the first time and they're uncomfortable with the process. Having staff that's culturally trained and prepared to understand and work with are extremely important. Connections to respected opinions. So what if I'm an organization and I don't necessarily have a lot of folks on our team that are people of color? Maybe they don't have any. What are some things they can do? Connections to respected opinion leaders in communities of color. So if you want to sit down with and make strides in the Latino community, connecting with those that are opinion leaders, those that are positions of responsibility, who are trusted in the community, are best ways to make those connections. And then the other thing is, when we think about this idea of creating a transaction, we shouldn't think of it, especially from those of us who are in the in institutions and organizations where we're actually creating opportunities. We shouldn't only show up when there is an opportunity for a transaction. There should be a relationship that carries on in other opportunities as well. So if we move from people, let's look at place. So when we think about the place standpoint and the barriers and the opportunities there, neighborhoods where there are plans are an ideal way for us to begin to make inroads. So strategy that is led by the residents of that community, or place-led strategies around what home ownership should look like in communities should be a priority. So as we think about priority, collaborative efforts among public, private, nonprofits who are vested in communities, in seeing things, in looking toward making changes in communities of color are absolutely vital. I'm going to talk about an investment that on the Fifth Third side that we made here just from recently, and I want to talk about that a little bit. Also, the inventory. What we know right now, inventory is an issue. As a industry, need to really look very closely at how we can make some inroads to making some strides in turning this around. The inventory issue for low to moderate income families. If you're searching for a home, oftentimes you're going to find multiple offers that are on home, and some of these are cash offers. So that makes it a very difficult situation for families right now. Proximity to services. So when you think about where you want to be, the places where you want to live, people of color often, just like any others, they want to be in a place where there's close to family, businesses, shopping, and transportation. So proficiency within the network, within the system, there has to be a built-up level of trust so that people will feel comfortable coming to us as they think about this idea of becoming homeowners. Outreach with intent. What does that mean? Outreach with intent is really targeting areas and neighborhoods with the idea that we are going to make a dent in how we can increase the homeownership rate, how we can increase wealth building, and making sure that's demographically aligned, going directly where people are. And your marketing should look like that. If I am marketing to the African-American audience, why shouldn't my marketing and the brochures and my passbacks and things that I use as tools, why shouldn't they also reflect that as well? Ease of doing business. You hear these stories about a person experiencing a situation where it just was not easy for them to go through the process. We should make this as easy as we possibly can as providers, those who are trying to create wealth in communities with our products, with the access and efficiency in moving people through the system. And then on our end, we have to continuously revisit the data and see where things are, and then coaching beyond homebuyer education. If we can move to the next slide, please. So, so on the Fifth Third side, let me talk about a few things that we've been engaged in really specifically trying to build wealth for people of color. So in 2016, we announced a $32 billion commitment that was specifically addressing low to moderate income communities. And low to moderate communities, not to say that every person of color is in a low to moderate income community, which they are not. But in these efforts, we know we were tapping into and reaching a large number of people of color in this effort. So that was a $32 billion commitment. We closed out that commitment in 12/31 of 2020, and we were extremely successful. We actually invested or lent $41 billion through that commitment. So we clearly exceeded our goals. We came back at the end of last year and created what we consider a new effort and a thrust. A lot of this was a response to the George Floyd murders, Breonna Taylor, Ahmaud Arbery, and what we saw through those situations. And we created what we call advanced racial equity, equality and equity initiative. And it was all around the idea of how can we lift Black neighborhoods and create wealth in those neighborhoods. So we made a commitment of $160 million in specific neighborhoods. We actually launched that last week. Pretty exciting things, and in particular, right here in Greater Cincinnati, we launched as a part of that. We were one of the 9 neighborhoods selected. The Avondale neighborhood was selected for an investment of $20 million, and that will be a collaboration of what we do with some of the institutions and partners that are in the neighborhood, and we ask others to join us as well. Over the past year, as so many of us have changed, had to make changes to how we reach customers. We went virtual. We're having workshops and had great success. We created a workshop series called Owning It. It's a homeownership series targeted specifically to minorities. And we reached over 800 folks in 2020. And it's been over 500 folks that we've reached here in 2021. We did that. We create these workshops in partnership with Black media and community-based organizations. Right now, we have a down payment assistance program that's geared toward qualified borrowers and qualified neighborhoods. And that's at $2,600 for those that who are wanting to navigate through the homeownership process. We have specific partnerships on the national level with the Church of God in Christ, or COGIC, as it's normally called, the Full Gospel Convention with NARAB. We have a workforce development partnership on a national level with the Urban League. We got a financial literacy component that we're doing in schools all throughout our entire footprint. So these are some things that we're doing with the idea of really building wealth at all levels, in all stages of life, whether you're someone that's thinking about how you can improve your employment situation, whether you want to become a homeowner, or whether you are a youth in school and you want to know more about how to understand money. As well, we've made substantial investments in nonprofits throughout our footprint, in particular here in Greater Cincinnati. We've had over $100,000 just here in 2021 to organizations that are specifically supporting the systems that make homeownership happen for families. I'll move to the next slide. I'm going to move past this slide because this just really talks about some of the challenges just historically, and these have probably been covered in some of the other sessions, whether we're talking about eminent domain, absentee landlords, redlining. All these things have created the systemic issues that has made it challenges for people of color to build wealth. And then just some of the things, the home buying trends. Right now, Gen Xers make up about 25% of all homeowners. First-time home buyers are 31% of all home buyers, and 12% of home buyers are purchasing multi-generational homes to care for aging parents. Ages 41 through 54 are the most racially diverse groups of home buyers, and age 66 plus purchase homes to be closer to family, friends, and a desire for a smaller home. Next slide, please. And then I'll field out just some wealth building opportunities. We can help to build wealth with really thinking of it at all stages of the life and all interactions that we may have, whether that is someone on their job, whether it's someone who's younger, whether it's someone that's older. There's always opportunities to build conversations and skill sets around wealth building. We should consider how wealth building become a lifelong journey, even after the home ownership. Oftentimes we spend time just on the home buyer education piece, and we don't spend time in the work that's after home ownership in helping people to really think about how they can tactically build wealth. Targeted investments and neighborhood growth strategies that is resident and non-displacement sensitive. So really thinking about how we can bring the residents of a neighborhood into the planning, into the strategy around what is best for their neighborhood. And then take wealth building to the places where people gather rather than expecting them to come to us. I think that's pretty self-explanatory. Thank you. Any questions? I think we'll reserve that at the end, but thank you for your time.
We'll save those for the end, Royce. And last but certainly not least is Alina Speed. She's the business banking relationship manager and vice president at Ohio Credit Union. So Alina, take us away.
Thanks, James. I'm really glad to be here this afternoon. You know, I've worked a long time with both Robbie and Royce, and they shared a lot of good information. So, you know, we've heard the data, right? We know that buying a home, owning a home is a great way to wealth build and to have an asset. You know, we've talked about the challenges, but we'll spend some more time in my presentation. I'm talking about those challenges, but the first one is really providing access to information. Next slide. There we go. So I'm going to just go over three things to make it pretty simple. I want to cover on the common types of mortgages and how they are obtained. We'll talk about common costs that are associated. And then lastly, we'll discuss some financing products and resources that help with buying your home. Next slide. So what is a mortgage? You know, I just want to make sure we make this really simple, but it is the loan that you take out with a financial institution to purchase your property that is going to be paid back over a different number of years. Next slide. One of the things we don't spend time talking about is what are the costs to having a mortgage? You know, we hear folks say, hey, I want a home. I saw this pretty house listed on a listing service, but what does it really cost for you to have this home? So if you look at a mortgage, right? So we just identify that that's that loan. What does that really mean? What's included in there? So you have your principal. That's the original amount that is borrowed. So for some context, if you were buying a home at $150,000, that would be your principal amount. But then there is a cost to borrowing money. And so that's your interest. That is the price that you have paid for credit. And then let's talk about your term of your loans. There are many options that are available. You have 15-year mortgages. You have 30-year mortgages. Most of us will take out a 30-year mortgage, but there are options. Now I'm going to talk about down payments. You know, that's been one of the barriers to home ownership that we see in a lot of low to moderate income communities. Individuals think that when they hear the word down payment, oh, I don't have enough money to purchase a home. But for down payments, depending on the type of financing that you will have, and we'll cover some of that later in the presentation, it honestly is not a lot of money that you may find a lot of households actually have the resources available for a down payment. So for an example, if we stick with a $150,000 home, you know, if you're able to come up with a down payment of 3.5%, that's, you know, $5,250. That down payment will help you, you know, to get into your home. Private mortgage insurance. You know, a lot of times when we talk about a mortgage, we hear these words and we hear these acronyms. I think the banks and financial institutions have become really good at things. But again, let's make it simple. So, you know, you have your private mortgage insurance. That's actually a protection to the lender, that if a borrower is not able to take care of their mortgage payments, that the lender is there actually protected. Another thing that we don't spend a lot of time sharing as far as information, it's about, you know, are you eligible for any discounts on your mortgage? You know, what's available? So with the discount points, a lot of times that's a fee that is paid to your lender when your loan is granted. You know, it can kind of help lower the interest for the term of their loan. And then fees. There are other fees that are going to be associated with obtaining a mortgage, but we want to make sure that everyone is aware of what those fees are when they're in the mortgage process. Next slide. So how do you prepare for a mortgage? You know, we spend a lot of time talking about, okay, I need a home, I'm ready, but how do you prepare? A big part of that is to make a budget. You do definitely want to check your credit score. Again, because that has been a big barrier for a lot of Black and brown households is the credit score piece. You want to collect your financial documents. We've heard it earlier from other presenters that you want to have pay stubs and W-2s. But then you also want to calculate, how much home can you actually afford? What does it mean to buy a $150,000 home? What is the true cost to you? Because it's not just your mortgage, it's going to be your utilities, your taxes, and other things like that. You want to make sure you spend time researching mortgage companies and that you're working with a trusted financial partner who can help you throughout this process. And then the last piece that's on here is you want to become pre-qualified, pre-approved, so that as you're out looking for a home, your real estate agent can see that you are actually able to purchase. Next slide. So what type of mortgage choices are there? You have a fixed rate mortgage, which means your mortgage rate will be set for you for the life of your loan. You also have an adjustable rate mortgage, and that means that your rate will fluctuate depending on market conditions. Next slide. This slide here, it is an example comparing the cost for fixed rate mortgage terms. So the first example that you'll see here is for a 15-year mortgage. The second example is for a 30-year mortgage. As you are comparing your cost of financing, I want to note that we have really good partners here in the city of Cincinnati who can help you with this. I heard Working in Neighborhoods mentioned earlier. They are a partner that does a great job at providing home buyer education, and then also the Homeownership Center of Greater Cincinnati. So we have partners in addition to your financial institution that can provide you with the education of what it really means to finance and break it down for you that would a 15-year mortgage be best for you or a 30-year mortgage. Next slide. So getting a mortgage, what kind of lenders are there? Who's out there? I think one of the challenges is we don't know who's out there. We hear about a lot of the banks, but we don't typically talk about the credit union. So you have banks, we have Fifth Third Bank here with us this afternoon. You have a credit union. I'm here representing Ohio Credit Union. You have savings and loans associations. You have mortgage bankers and you have mortgage brokers. Banks and credit unions are full service financial institutions, and your savings and loans and your mortgage bankers and your brokers, that's really their focus area. So they may not have some of those full service options, but it's important that, again, we break down the barriers, that we provide this information as to what type of lenders are out there and available to serve our community. So again, banks, credit unions, savings and loans, mortgage bankers, and even mortgage brokers. Next slide. So when we talk about obtaining a mortgage, there are government agencies that do help with the mortgage process. You have your federal agencies, and you also have your state or your local housing finance agencies. And a lot of those partners are here today, and we have heard from them, and thank you for that information. Next slide. So let's talk about home buyer assistance programs, okay? So you have the Federal Housing Administration, which is FHA, and you have your two government service enterprises, which, is Fannie Mae and Freddie Mac. FHA, Fannie Mae, and Freddie Mac offer lower down payments for a mortgage, okay? So FHA, Fannie Mae, and Freddie Mac, you can put down as little as 3.5% of a down payment to purchase a home. A lot of times, lenders, or when we hear things out in the community, typically individuals associate a down payment of being 20%. And that 20% number can seem like such a barrier. But we're here to bring you the information today that, again, FHA, Fannie Mae, and Freddie Mac have programs where you can put down, again, as little as 3.5% down. There are also programs that are available with the Department of Veteran Affairs, where there is no down payment or private insurance premium that is required. And then also you have the USDA, so the United States Department of Agriculture and Rural Development allows for no down payment as well. Next slide. So getting a mortgage, how do you build that readiness? Again, just a few steps here just to share. I want to note that in the expo portion of today's conference, I've left a lot of information out there and even some sample forms for you all to take and to go through. But first step, monitor and improve your credit score. Put yourself in a know. Know your information. You are your own best advocate. Number two, it says aim up to save 20%. But again, FHA, Fannie, and Freddie Mac, you do not have to have 20%. 3, compare all cost. Find out exactly what it is going to cost you. And then lastly, work with a financial partner that you can trust and that's willing to do the work and to explain everything to you and make you comfortable with the buying process of obtaining a home. This will be one of the largest purchases that you'll make. Next slide. So what does the application process look like? We've talked about this a little bit, but again, just to share in a few steps. So you go through the pre-qualification process or pre-approval. So inside of that process, that's where the lender that you're working with, they're going to review your financial information. They're going to ask you how long have you been in your job, pull your credit score, look at tax returns, look at your W-2s. They'll even do employment verification to make sure that you're still currently working at that employer. The second step is you will be provided with a loan estimate. So that is where a lender reviews everything that you've shared with them, and they will go over the sale price of that home that you want to buy. And they'll put together an offer letter for you as to what that's going to look like. So it has to have, the total cost of interest, what payments would be, all that would be listed inside of your loan estimate. Again, you want to talk to multiple financial institutions so that you are making the best decision financially for yourself. So you want to compare and evaluate different offers that are out there, okay, and make the best choice that is right for you. And then the last step that we have here is called settlement. So that's a process where you prepare for closing. You'll do like final walkthrough of your property, and then you'll sign your loan documents and obtain your keys to your home. Next slide. So when you're comparing those mortgage offers, and I won't spend too much time here because our time is going by very quickly, but you want to compare your offers. And so again, just an example of what that would look like. Next slide. So just wanted to share that in summary, as we get ready to close out this session and allow time for question and answers, that again, there are several factors that impact your total cost of your mortgage and your monthly payments. Please find a financial institution that you trust and can work with to help you. Number 2, there are several different loan types and options that are out there in addition to just conventional financing. You have, again, FHA, Fannie, and Freddie. So there are options, or veteran loans, or USDA, several options. Find out what's going to work for you. Number 3, again, talk to different financial institutions. Find the financial institution that is willing to work with you, who is willing to explain how this works, and that will put you in the best capacity for this large financial decision that you are going to make. Thank you so very much for the opportunity to present today.
Thank you, Alina. Really excellent presentation from all of you. I really appreciate it. I have a couple of questions for you, and then Robbie also has some questions for the two of you. One question that I have is that post 2008, when we went through the mortgage backed security crisis and everything, like, a lot of the regulations changed, and it became much more onerous to buy property. How much of how many of the challenges that we face right now depend upon some kind of revisiting of federal policies that we need to change at the legislative level? And I'll throw that to all three of you. That is that a problem, and what do we do about that?
Well, Jim, there was a lot of regulation that came out of that experience, because what we saw prior to that experience, there were a lot of bad actors in the industry that created unnecessary and devaluation in the market, and really hurt borrowers in many situations. So what you often find is when something happens, there's this reflex, and sometimes there can be an over regulatory response to situations like that. But at the same time, too, what we did find out of that is there were some real protections that came out of that really benefited borrowers. So when you think about an appraiser who now has to go through certification, you think about a mortgage loan officer who has to go through certification, you think about anyone who touches the transaction can't have a personal interest in that transaction or with others who are involved in that transaction. All those are things that were issues prior to what we saw before. So those are some benefits that came out of it. But what we did see is that there was some reaction from many lenders who were fearful of then offering low down payment loans. Now we're seeing those now, but we saw a period where if you were a borrower who required or were looking for flexible financing, it was a little bit more difficult to find. We also found that out of that, the whole appraisal industry has gone through a little bit of shakeup, and it still requires some additional work in there. If we can see some of the reports here of recent, how African Americans are still struggling with the idea of what it means to get a fair appraisal on their home.
And Robbie, you mentioned the appraisal issue in your comments. Can you just expand upon that? Why that's such an issue?
Certainly. So Royce alluded to some of it, but just to be a little bit with more detail, you can have two homes that are exactly the same, but one owned by a person of color and then one owned by a white family, and that property owned by the white family will appraise higher than the property for the black family. There have been some statements made that are proven to be incorrect, but that the home owned by the black family was not maintained as well as the home that was owned by the white person, and so that's the reason why the appraisal was different. Those statements have been proven to be absolutely incorrect, but that was one of the industry sort of standards to make the illusion that the property would have a lower value. This is something that's still going on today, and as Roy stated, the appraisers have gone through some rigorous work to make sure that they're not part of an enterprise that causes difficulties in this area. But there still are ways around that, and homeowners and home buyers of color are still having those issues today.
Isn't there also sort of a shortage of appraisals? It's often difficult to get an appraisal booked sometimes, isn't it?
That's definitely true. And even though Cincinnati Development Fund does not do mortgages for individuals, we have the same issue with appraisals for our work when we're looking at single family properties to be appraised. So there is a shortage, and that's an area that is going to take a little while for it to shake out so that we have some equity in that particular area.
And Alina, your presentation of just how complex it is to buy a piece of property. And we have a whole demographic of moderate and low income people who really, it's never really been on their radar to buy a home at all. How do we address the educational demands of that, of just making it so that it's not as just terrifying as it could seem, because there just seems to be hurdle after hurdle after hurdle that you have to go through.
Yeah, there are a lot of hurdles, and I think we've heard this earlier from our panel. I think Royce talked about this specifically, and I will reiterate it. We have to go to our community. We have to be there. We have to show up. There is a lot of issues. Okay, we'll say it that way, where there is a lack of trust with financial institutions, and financial institutions have to do a better job now. We are dealing with, fintech. We hear about financial technology. We hear about these mortgage brokers. They're there. They're institutions. They're friendly. They're talking to you. But the financial institutions, we have to go into these communities, especially where a lot of us, we have brick and mortar locations. There's that opportunity to do that and to provide inclusive services to who's here. We have to service people better. I want to go back to the question that was in the chat as far as mortgage products. I will say this: I definitely think there is an opportunity for financial institutions to look at how credit is reviewed. There are a lot of individuals who live in low to moderate income communities where maybe they don't have the highest credit score, but if you were to look at their history of rental and utility payments, that those items are paid on time. And I think those are the things that lenders should really start to look at, because that can paint a different picture of, for example, something that I see a lot in my world of $100, medical bill that was past due. So there's an opportunity for the financial institutions to look at how credit is reviewed. So I just wanted to share that with everyone.
Lena, can I touch it, lean on that as well, on the credit issue, because that's an issue that many people feel like it totally disqualifies them from becoming a homeowner. And what I tell folks in the opportunity, when I get an opportunity to speak around this issue, is that maybe the answer is no today, but the answer is more not. It is there's still an opportunity for growth. So if you have a lower credit score, that doesn't necessarily mean you'll always have a lower credit score, but what it does mean that while you do have a low credit score, you're paying more for everything that you do relative to credit. So how can we sit down with you, with our partners with Working in Neighborhood or the Homeownership Center or the Urban League, and help individuals, help families to move their credit scores upward? We can do those kind of things. Get people positioned where you're not always necessarily in a permanent state of a low credit score. I just consider that's your entry level credit score, and you're going to work your way up.
Yeah. And Robbie, I know you had some questions for Alina and Royce.
Well, actually, one of them got answered during the comments, but one of the things I did want to address, and this is definitely a barrier to homeownership that I did not share because I wanted to bring it up during this particular chat, which is working with individuals who are using payday lenders and check cashers as their permanent banks. So you're not getting the opportunity to work with them. You don't see a lot of the things they do unless they make a misstep with the payday lender. How can we work in conjunction with this primary bank to move them, to move our potential clients away from them? There's got to be a way that we can make that a mission or a focus to help our individuals leave that predatory practice.
When you think about the those vendors, those proprietors of credit and financial services, whether we call them a payday loan, whether they are a rent to own, all of those come with a cost. What I have found is that those industries are absolutely phenomenal at what they do on the relationship and the people quotient. They know the name of your dog. They know your birthday. They can talk about your next vacation you're going to take, but at the same time, they're going to charge you an exorbitant fee for the services that they provide. Prior to this market, I served in the St. Louis market, and you could charge up to 465% interest on a loan. So the idea of being able to go to a payday lender and feel like you can get ready cash, there is a price that comes with that. And as those who are in the financial services industry, it is up to us to continuously provide information around really the downside to going down that path. And then there should be actually ways so you can get out of that cycle as well. And we all have instruments, products, and tools to help people to get out of that cycle, no matter how nice they treat you.
Elena, how do we communicate that into the neighborhoods that have the people that we're trying to really afford the opportunity to develop wealth through homeownership? Because these are the institutions they're dealing with, and they don't come to you, and they don't come to you, Royce. How do we overcome that?
That's a great question. And that's where I say, I know that there are a lot of folks that are on today's session that work in our communities. This is where I see a great opportunity for the community development corporations, the neighborhood councils, the business associations to work collaboratively to provide these solutions to their neighborhood members. Royce mentioned, working with, the Urban League, working with Working in Neighborhoods, Homeownership Center, but we have a lot of neighborhood-based organizations where they have the opportunity and the reach. Because a lot of times financial institutions, we don't have that same reach because we haven't built that trust, or we have not, historically spent a lot of time in those communities. But where our neighborhood-based organizations, they have that reach. And so it's an opportunity for organizations like Fifth Third, organizations like Ohio Credit Union to be invited in to share this information, because this information is not shared. And so obtaining a mortgage, there's a lot of mystery to it. It's not made simple. No one wants to explain it to you. So we have to be invited in with those partners, James.
Yeah.
I'd like to mention just one other possible solution to this issue is a consumer-based CDFI that is doing consumer lending to individuals that can come alongside the institutions that are predatory and do the education, provide the funding, the small dollar loans to support the individuals that are using these services today. And those are just other ways that financial institutions can help to support the consumers with providing funding to help develop consumer CDFIs, which we don't happen to have one in this area currently, but they've been proven to be outstanding partners in other parts of the United States.
And I hope that might be one of the action items that maybe we come out of this with as we move forward. We're unfortunately out of time. We could run a whole day on this topic alone. And if we don't solve this one, we can't solve any of the other ones. If we can't get over the financial barriers, these hurdles, and the educational part of this, and just the fact that we have a whole demographic that really thinks this is not even possible for them. And somehow we all need to do a better job of that. Let me thank all three of you for your contributions, not only on this panel, but for the work that you do every day, trying to help communities of color really move from these rather desperate situations they're in, where wealth is not really a possibility, to one in which wealth not only becomes a possibility, but hopefully intergenerational wealth becomes a possibility. Because if we really want to deal with the heart of systemic racism in this country, wealth is the key. That's the path. That's the road out of it. I really believe that. And I think the work that all of you are doing is really helping us be on that path. So thank you so much. So I'll turn it back to Liz at this point so we can prepare for the final session. Thanks again.
All right, good afternoon. We are winding down the day, but before we get to our last session, it is time for another raffle. So we will be choosing 5 names. So let's go ahead and spin. All right, Jennifer Foster. So again, in the chat, if you can write your name and winner next to it so that you can claim your prize. Let's spin again. All right, Connie Hollins. Congratulations. So again, make sure that you write your name in the chat, winner next to it. All right, Fry. And we say Lambda. So you are the next winner. So make sure, don't forget to write your name in the chat. I see Connie did. All right. I don't want to mispronounce your name, so we have another winner. Make sure that you write your name in the chat and winner next to it. One more spin. All right, and we have our final winner. Thank you guys so much. And we're so excited that we're able to support local Black businesses today and every day.